This is the Royal Financial Investment Group. This is Prince Dykes, your host, as always, coming to you guys with another great, awesome, and educational video. Today's video is going to be what is a stop loss and how to enter it with etrade. So again, we're going to talk about what is a stop loss and how to enter with etrade. But as always, don't forget to like, subscribe, comment, share, leave me some comments. Give me a thumbs up if it's a good video, thumbs down if it's a horrible video, and leave me some comments, talk to me, let me know how I can get better or whatever. So let's jump straight into the video because I don't have a lot of time, and I definitely know you guys don't have a lot of time. So for example, right, I have a Facebook stock pulled up, right? This is when you're going to, the market is open right now. Facebook is down, what, 1.2724%, but this is a horrible day on the market, so everything's down. Great time to buy though. But anyway, so let's say if you're someone, let's say if you own the Facebook stock, right? And you're saying, okay, so let me scratch that and say, so let's say what is a stop loss? Let's get into that. Let's say if you didn't even know what it was. So what is a stop loss? So let's say you own a stock, right? Let's say if you brought Facebook stock, for example, for $80. And Facebook stock is now trading at $86. You got a $6 profit per share. So you don't want to lose, you want to say, hey, if it keeps going up to $90, $100, great. But if it starts to decline, I want to make sure I don't lose all of my money, right? So you bought it for $80 and you're like, now today, as you can see, is at $86. You're like, okay, if it drops below $83, just get me out of there. I don't want to sit here and watch the market all day and watch everything all day or whatever. How can I just set something else? Just like, hey, if it hits this price, get me out of there. That's the whole point of a stop loss. Stops your loss, right? You're losing on something, you don't want to stop your loss and keep your profits, walk away. Or if you're in a position you're saying, hey, it's gotten below what I expected, get me out of there. So how do you set that up, for example? So for here, let's say you're going to sell. And you're going to sell, let's say, 4 shares of Facebook stock. So you have your options here on price type. Now on price type, it says stop on quote. So a stop on quote is essentially going to say, hey, when it hits this price, I can put in $83, right? So no, not 53, I'm 83. $83. When this stock hits $83, get me out as soon as possible. So essentially, when Facebook stock hits $83, your order is going to turn into a market order, which is a market order means that get me out as soon as possible, the best available price that I can get at the particular time. That's what a stop on quote is. Then you can go to a stop on quote limit, right? So your limit could be, your stop price could be, hey, when it gets to $83, you can say, hey, when it gets to $83, I want you to only get me out for $82.50. So you're saying your stop price, what this means, what you can see here, is when this stock, when Facebook hits $83, get me out for $82.50. If you can't get me out for $82.50, don't get me out at all. That's what a limit is. A limit means that, hey, I only want this price. I don't want nothing below it. I don't want nothing above it. I want this price and this price only. Follow me? So this says, hey, Facebook is at $86 now, but if it hits $83, get me out at this price. That's the way you can use the stop limit on quote. Now, a trailing stop, right? Hey, I want to trail this stock by, let's say, $2, right? A trailing stop, you can say, hey, I want to trail this stock by $2. So as Facebook goes up to $90 or whatever, a trailing stock means that it will follow the market price. But as soon as it turns around by a certain amount, let's say $2, as soon as it turns around, as soon as it drops more than $2, get me out. So it trails it. So it's not a particular price to get you out. You're saying, hey, as long as it's going up, cool, keep me in there. But as soon as it turns around and drops more than $2 or $3 or $5 or whatever your stop value is, get me out. Follow me? Trailing stop by $. Now you have a trailing stop by percentage. It's the same thing as a $, but you're going to put in a percentage. Once this stock drops more than 2%, get me out. As long as it's going up, cool. But if it drops more than 2%, get me out. Right? That's a trailing stop. Then your term is how long these terms that we just set up. I mean, whatever one you decide to pick, how long you want it good for. You just want it for today, or do you want it for 60 days? So you can set up the favor 60 days. You can set on a trailing stop by $, trailing stop by percentage, all these different type of stop loss. So this is how you can stop your loss. You don't have to sit here and watch the market and take a nap and wake up and be like, wow, this my position fell off this much. I didn't want to do that. You can set up a stop loss to say, hey, if it does do this, get me out. I don't have to worry about it. All right. So anyway, that's the end of the video. Hope this video was helpful. If it was, let me know. Don't forget, and you guys know what to do until the next video, right? Be safe.